Analysis. Julia Lee joins us from Bell Direct. Julia, a new high for 2009 for the Aussie share market.
Right, it was another good day for the Australian share market with a gain of 1.1%, and it was on some fairly strong volume with $6.9 billion worth of stock trading hands today. Coming into our market, we did see a good lead from the US overnight, and the US market has reached quite a significant stage. If I bring up the S&P 500 index in the US, this is what it looks like. This is a 52-week chart, and you can see the market at the moment has come up to a key level of resistance. If we see that level of resistance broken in the next couple of sessions, that would be a good sign for the US market and a good sign for the Australian share market. In fact, if we have a look at the Australian share market over the last 52 weeks, we're facing exactly the same type of resistance. So resistance level at 4,350 points for the Australian share market, and that's going to be the real test in the next couple of sessions. If we have a look at the RSI, and the relative strength index tells us whether the market's looking overbought or oversold at the moment, and you can see that the relative strength index is above that black line, which indicates it's actually overbought. So the market does look like it is hotting up. It could be overheated at the moment, and we could see a pullback coming soon. Today on our market, it was a very good session. The gain was led by our miners. We saw BHP Billiton up by 2%, Rio Tinto gaining 4.3%. The banking sector as well continued its stellar gains from last week. In fact, in the past week, we've seen Commonwealth Bank and National Australia Bank up more than 11%, and we've seen ANZ gain more than 14% in the past week. Today, for the big four banks, we saw gains of between 0.5% to 4%. We saw some strong moves across the market. Some standouts were Austar, which was up almost 9%. It's been on a steady rise since its first half result last week, which was quite strong. Incitec Pivot rose 7% today. It's been well supported by some broker upgrades. But the sectors that you didn't want to be involved in today were the defensives. We saw the staples, the healthcare and the utility sectors all losing ground, but elsewhere around the market gains.
Yeah, very good gains there. Now, what about the Aussie dollar? Because we've seen it heading fresh 10-month highs throughout the day. How did it respond to the interest rate decision?
I guess the key event for the Aussie dollar today was the interest rate decision at 2:30 p.m. Let me bring up a chart of the Australian dollar, and this is from 10 a.m. till now, and you can see after the interest rate decision we saw an initial spike and then it was downhill for the Aussie dollar. I think there's a couple of reasons for that. First of all, no one in the market really expected any change in interest rates, and certainly we saw no change in interest rates. Interest rates were on hold for the fifth consecutive month at 3%. The market was also pricing in that the RBA would change to a neutral stance, and indeed we saw that. But I guess what the currency market was looking for was timing about a potential rate hike. I mean, last week we saw Glenn Stevens come out and say that there's no rule of thumb which says that the Reserve Bank has to wait until unemployment rates have peaked before they raise interest rates, and that sent a rally in the Australian dollar. I think the currency markets were looking for more of the same type of rhetoric, and that didn't come through. So we did see the Aussie dollar being sold down. Still, we're seeing at the highest levels since September last year. So we did see the Aussie dollar easing off, but from very high levels.
And of course, 10 Network coming out with a second go at the capital raising. How's it likely to fare?
Look, 10 tried a capital raising back in February, which it cancelled because of lack of demand. Now, that particular capital raising it attempted in February was at the price of 75 cents. Of course, the market was going down, and now it's attempting another capital raising, and this time at a higher price of $1.15. And I guess that just shows what role market sentiment plays when it comes to capital raisings. This time around, I think 10 will be well supported in its capital raising. Of course, this time around, the capital raising is actually guaranteed. It's underwritten by Macquarie Capital. But the market's in a very different place than it was in February, and investors at the moment are willing to add more risks to their portfolios. In fact, we've seen cyclical and growth sectors such as media stocks, the media sector, doing quite well. 10 shares have been doing quite well. They're offering an 8.4% discount to the last traded price. They are looking to raise $138 million, but their major shareholder, CanWest, will not be participating, and that's because CanWest has problems of its own. So that means CanWest's stake will be below 50% after this capital raising. 10, of course, not trading until the institutional component of this capital raising is completed, but it does look like it'll be well supported.
Julia, thank you so much for that. And of course, we will see you at 8 p.m. Eastern with your guests for Your Money, Your Call tonight.
Thanks, Friday.
See you then.